Welcome to this week's Cattle Call. I'm Susan Littlefield. I am on the road. I'm at the U.S. Meat Export Federation meeting that's taking place here in California. So let's take a look at what we're seeing on this cattle market this week. And cattle has been a big discussion here at the conference, including what's been happening with the Grassley-Fisher bill, and then add to that the discussion about how cattle producers continue to be in that driver's seat. Well, Brad Kooima joins us once again. And Brad, I think we need to start out with, you've been doing a lot of work behind the scenes on this Fisher Grassley bill. Kind of what does this all mean for cattle producers?
Well, I guess I'd like to think that it should cause at least just a tiny bit of hopefulness, optimism. And the Iowa cattlemen have been engaged with this issue for, well, more than a couple of years. And we've tried to have a seat at every table that was available to talk about, the issues of increased negotiated trade, price transparency, as well as price discovery, and then even better, if we could get a little bit of price determination, or you can call it leverage if you prefer. I prefer the word leverage, I guess. But now, is this a perfect compromise, which is what this is? It's a compromise between Senator Grassley's bill and ultimately what it amounted to was the other Senator Fisher bill. Her dynamics, some of those were really good, we thought. The thing that we felt was lacking with her bill, of course, was she had such a low number in terms of the regional mandatory minimums to trade. So this new bill, of course, is nowhere near 50%. But it's much, much better than where we started with the compromise when the two parties, when Iowa and Nebraska, those two groups were talking back and forth politically to try to come up with something that was workable, that did have and actually, I really think this one has a really good chance of passing, is what they're telling us. So, there's some cool things about this thing that nobody else is. Well, there are some things about this bill too that include some things that I think are a big deal because Iowa brought them to the table, and things like the cattle contract library, the thing like next day cattle weights. Why don't we get to know that? The packer knows every day he writes a check because it's based on what they weigh, right? Mm-hmm. And what you paid for them, that's the check. So why don't we get to know that on a timely basis like they do in the hog industry? They get to know it 24 hours, from when it's happening. So, it's only an introduction of a bill. This is not. Right. However, the hope would be that the timing is such that we time this with the LMR reauthorization in December, and that gets folded into that whole thing, and we hope to have a vote on it before the end of the year. Is it going to fix everything? No, but I think it's a big step in the right direction.
So what is something a cattle producer, when they look at this bill that's been introduced, there's a lot of fingers in it and a lot of different directions it's going. How do they decipher it? And I know that you guys have been working on it pretty hard through NCBA. And as our listeners and viewers know, you're a cattle producer as well.
Yeah. Well, I don't feel bad. I've been immersed in this issue for years, and it's not easy. First of all, it's not easy language because it's not the language you and I are used to. It's lawyerese, right? But I think that the key components on this thing is that it's going to create regional minimums. And if you want to know, okay, what is that, Brad? Well, if it's 18 months, which is the last 18 months, there's been a nice uptick, largely thanks because of negotiated grid trade, but okay. So you're going to have Texas, instead of like 2 years ago when they were limping along at 5.5% negotiated trade, this would take that number to closer to 12 or 13. Okay, it's not 50. It's a lot better than it was. It's more than double than it was. Kansas would have to negotiate about 22,000 every week, which is a far cry from where they were at 10, 11,000 here a couple of years ago. So, and it's something that's going to be automatically reviewable, or it needs to be reviewed every other year. So every 2 years they get to look back and say, okay, is this doing what it was supposed to do? Or is there been something that we didn't anticipate, unintended, that is doing that we don't want it to do? So that's a big deal. The 14-day report, or the need for the cattle to be slaughtered 14 days after bought, I think is very important. Anybody that's fed cattle the last little while has to relate to, geez, I got cattle sold and they're still here. 3 weeks, 4 weeks, and I'm feeding them $7 corn, right? So that's a big component of it too. The other things that I mentioned earlier, I think are important, but knowing that what they're going to have to do every week is bigger than they've been doing before, and the 14-day component is something that Senator Grassley, I think, felt very strongly about, and I'm sure glad it's still part of the bill.
Something else that's been discussed a lot here at USMEF has been the recent cattle prices. And as I sat at a table this morning at breakfast with some cattle producers and some pork producers, they all came to the same consensus that it's nice that producers are in that driver's seat right now and are being able to say, nope, I'm not taking that. I'm passing for higher numbers.
Yes, and that's something that you and I started talking about. What do you think, Susan? 3 weeks ago, maybe?
4 weeks ago.
Yeah. Then, it was like more nuance, right? Though it feels like we dare to. I mean, we sat at 122, within $2 of 122 for 26 weeks. That's a half a year. It's goofy. You're going to tell me that the fundamentals didn't change in those 6 months? I mean, come on.
Right.
So finally, I know that we've talked about this, but I'm going to say it again. I think that there are some analysts that think that we have this big backlog of cattle. They've repeated this sentence now since August 9 of 2019. That's the anniversary date of the Holcomb fire. We backed cattle up then, and then we backed cattle up because of COVID. And, we've been so busy putting extra barbed wire in our fences because the cattle weigh 4,000 pounds now. I mean, come on. I'm of the opinion that I don't think we have cattle backed up at all. And it shows in the leverage finally where we decide, hey, you know what? We're not going to take 124 this week. Hey, we're not going to take 130 this week, which is what we did this week. Held out and got 132 for the most part. Packers got lots of margin. We needed to get some way to, twist their arm enough to say, you know what? We're going to ask for a little more. You got plenty to share with us. So it's a big deal. A lot easier to talk about for me in the cattle side of it than those poor hog guys where hard to tell what that cash market is on a daily basis, right? And we don't want to go there. That's what we're fighting for in the cattle business.
All right. Well, next week, hopefully we're talking some higher prices and maybe a little bit more movement. Does that work for you?
I think we will.
All right. Sounds good. Brad Kooima has been joining us this week for Cattle Call. Just a reminder, commodity futures and options do involve a substantial risk of loss, and they're not suitable for all investors. And that's this week's Cattle Call from the U.S. Meat Export Federation's meeting in California. I'm Susan Littlefield on the Rural Radio Network.